Afternoon, everybody. I'd like to call to order the Audit Committee meeting for August 17th, 2021. Councilmember Shade, would you be so kind to lead us in an invocation?
Thank you, Mr. Chairman. And we'll do something a little different and read from the prophet Khalil Gibran as following. For in the sweetness of friendship, let there be laughter and sharing of all pleasures. For in the dew of little things, the heart finds its warning and is refreshed.
Thank you, sir. Next item on the agenda is the approval of the August 18th, 2020 minutes. Do I
move for approval?
All right, we've got a motion and a second. Any discussion? All in favor, please signify by saying aye. All right, motion passes. Minutes are approved. Item number 3 is a presentation from our CFO, Ms. Amy Wharton. Take it away. Sure.
Amy, we can't hear you. No, you got to get closer to the mic.
Turn it on.
I think they're coming to check it out. Sorry, Amy.
Good. Can you hear me now? Okay, there we go. Actually, it will be a presentation from our external auditor. I just want to introduce Miller Edwards with our accounting firm, Malden & Jenkins. And I also wanted to thank my finance staff for all of their hard work in our financial report. So I'll turn it over to Miller. Thank
you. Well, good afternoon. So y'all just approved the minutes from last year? I think I might have been at that meeting, at least virtually last year. As Amy said, my name is Miller Edwards. I'm with the CPA firm of Malden & Jenkins. We appreciate the opportunity to be here today to present your annual audit for 12/31/20, and of course to answer any questions that you may have. This year, I kind of took the prompt from last year. You know, last year we did the meeting virtually. We did it over Zoom or Teams or something like that, and I put together a PowerPoint. This year I decided to do the same thing, so I hope you have a PowerPoint available to you. Amy, I asked that question. Do they already have it, the PowerPoint, or they only have the? Okay, all right. Well, we've got on these two screens what I'm going to cover, and I think it'll be just fine the way it is. What buttons do I hit? The advanced right? Okay. Not a clue. Did you do that or me? Okay. All right. Pardon all that. Again, I'm here today just to kind of talk about a variety of things, tell you a little bit about who the firm is that does your audit, talk about the financial statements, the highlights, and those kind of things. I guess I have to ask. Sure, I don't know which button. I'm hitting all the buttons. Okay. Yeah, if you could advance it. All righty, just a little bit about us. I'm going to be very quick on that. We currently audit about 550 governmental units, very similar to yourselves. We audit about 140 cities. Some of those cities are quite large, like yourself. We also serve clients that receive the Certificate of Achievement, like you all do, from the GFOA. Amy, I'll go ahead and let you go forward. Some of the similar governments that we serve, I've got a few listed right there. Places like Columbus, Georgia, Augusta, Georgia, Greenville County, South Carolina. We do North Charleston, Goose Creek, and some of those around this area as well. Savannah is another example of a community that we serve, just to give you a little taste of some of our background. As far as the audit itself, the number one thing I want to share with you today is what was the nature of our audit and what did it result in? Well, the first thing you want to know is, do we have a clean audit? Is everything good? And I'm happy to tell you that your audit is a clean audit. It is what we would say is an unmodified report, meaning that we do believe that the financial report that's been presented to you by management, it's about 150 pages long, good reading, by the way. It is indeed presenting fairly all the financial results of operations, the financial position, all those type of things that are required under the standards that we all have to follow. Another thing that we have to do with an entity of the size and nature of Charleston is do what's called a single audit, whereby we test your compliance with laws and regulations relative to all the federal programs that you all have. This past year, you had just under $10 million worth of federal funds. And we had to audit 3 of those major programs. And we were able to come back to you and express a clean opinion that all I's were dotted, all T's were crossed, and all controls were in place that you needed to have to manage your federal programs that you had this past year. Another thing that we talk about is the fact that you did get the certificate last year from the GFOA, and I fully expect you to get it again. Amy, how many years have y'all been getting the certificate? You're probably one of the founding parties to it all. 27 or so, yeah. The city's always been a very high-level participant with the GFOA and continues to be so. Okay, looking at the numbers, you are, if you didn't realize it, you are a very large local government. At this current time at 12/31, you have over 1.65 billion, that was with a B, $1 billion worth of assets. Now, before people get excited, that's not all in cash. It's a lot of your infrastructure. It's places like this right here that you all have done so well by developing and expanding your operations, your facilities. You've got over $1 billion worth of hard assets. We're talking about buildings, facilities, infrastructure, trucks, cars, everything, you name it. You've got over $1 billion worth of a depreciated value of that. You've also got about $620 million worth of liabilities. Probably of that 620, about 550 million of that is long-term. When I say long-term, I'm talking about things like notes payable, bonds payable, and pension payable. You know, you participate in the PIBA with the state, and you've got a certain liability associated with that, that all communities that participate in PIBA have. You have one as well. But all that rolls up to your liabilities. If we had to close the door today, how much do you owe? $620 million. But you've got over $1 billion worth of equity. And that's the first time I think you've crossed over the $1 billion mark when it comes to equity, meaning you've got a very healthy situation here. You're not upside down. I know when I got out of college, I was upside down. I had a truck and I had a note that was a lot higher than my truck. Okay, I had credit cards I had to put onto that note, make everything right. You're not like that. You've got it the way it's supposed to be, just like we have at our homes. We have our homes and hopefully we've got less debt every year. The same thing's true here, and you're creating a great net worth here in the community. And I think that speaks highly for you all as well. It not only speaks highly of today, but it speaks highly of your past. I want to emphasize that. Another thing to look at when it looks at the entity-wide, if we could go back where we were, Amy, you had about 335 million in total revenues this past year across all funds. I'm not talking just the general fund. I'm not talking about just 1 or 2 funds. I'm talking about you take all your funds and roll them together. It's about 335 million. You spent about 281 million. And you had a bottom line of 54 million. Now, some people may say, wait, why do we have to have a $54 million bottom line? I can show you why. If we can go to the next slide. If we start off with that 54 million, look at what else you had coming and going this past year. You had about $69 million of prior year capital projects fund balance that rolled with it. It's very important that you had that fund balance in the past year. Additionally, you had about 25 million in depreciation expense. That's a non-cash flow expense. So I throw it back in there as cash available. And then you got 95 million that you had in proceeds of long-term debt this past year, meaning you went out on the market, you had certain things that you obtained indebtedness for so that you could use it to build certain assets and do certain things. So then we look at how we used it. And you spent 76 million of repaying some of your long-term debt. But look at that number of 138 million. This city spent $138 million on all of your hard assets. That is incredible. That is a great thing. I mean, to see a community of this size and nature investing in itself the way you have done this past year, that speaks volumes. You can see it as you ride around town. I'm not from Charleston. Whenever I come here, I'm always in a wow mode. You all do a great job of investing in yourself. And this past year it was $138 million. That gave you excess reserves of about 29 million. Well, personally speaking, when I look at a $335 million operation and I see 29 million available to do other things, I don't think that's too fat. I think that's about where it ought to be. We have to prepare ourselves for Mother Nature around here, don't we? And guess what? We also have this thing called a pandemic. You may have heard about it, but there's all kinds of things that happen in our life, and it's always important to continue to put some money in your reserves so you can do all the things that you do proactively. And that's definitely one thing about this city is everything I see and feel is proactive. You're not sitting here being reactive, you're being proactive. You have to have the money to do so. Looking at the general fund, which is the heart and soul of this government, you've got about $140 million worth of assets. You've got about 39 million of liabilities, things like accounts payable and accrued salaries and things like that at the end of the year. You've got a fund balance in total of about 101 million, of which 47 million is unassigned, meaning all the other ones are committed, restricted, or assigned. But you've got about 47 million that's unassigned. That represents just short of 3 months worth of unassigned fund balance at 12/31, at December 31st. You've got almost 6 months when you look at total fund balance. That's not a bad place to be. I think y'all look pretty good when I look at numbers like that at 12/31. The general fund took in about $215 million worth of revenues, and it spent about $206 million on expenditures. About a $9 million increase in fund balance. I think that's a healthy increase. I don't have a problem with that at all. When looking at the general fund, I've got a couple of pie charts and some bar charts in here to just kind of show you in pictures kind of what's happening. When you look at that particular chart, all I'm trying to emphasize there is where is the major revenues coming from. And you see that big green slice, that's almost half of the pie. That's property taxes. A lot of us don't like them. We got to have them. Property taxes is a very stabilizing revenue source for any community, and you've got your fair share of it here, and it shows. Next slide is the expenditures. Notice that other big green slice on this particular one. This is looking at your expenditures, and public safety is right where I expect it to be. It's about 45, 47% of your total expenditures. That is not unusual for a city of this size and nature to have that much spent on fire and police and those kind of things. So again, that gives you a little taste for where the monies were spent and what monies came in. We can go to the next slide, Amy. This looks at your general fund operations for the last 5 years. Notice the green bar, that's revenues, and notice the red is your expenditures. Notice how both of them are going up over time. But the good thing about what I'm seeing right there is the green is always a little bit more than the red, meaning we're growing our fund balance, we're putting things in reserves, we're there to store the money for when we need it for other kind of projects coming down the pipe. This also shows the same kind of results. Notice all these numbers are in positive, meaning you didn't have any deficits, that you didn't spend money more than you took in. Each of the last 5 years, you've had increases in your fund balance. Again, we've been doing your audit for about 5 years now, and you're healthier now than you've been before. That's a great place to be. Another thing I like to emphasize looking at the 5-year period is how fund balance, a lot of people ask me, what's so particular about fund balance? Why do you have to have it? You want to have a certain amount of funds available to you at all times. You can't wait for the seasonality of property taxes and things like that. But when I look at what you've got for expenditures, this past year was about 203 million when you take expenditures. And notice the 101 million down the blue bar below. 101's out to the far right, lower down. That's the relationship, and you're about 50% right there. That's the 180 days that I was talking about earlier. You need to have that. And to me, this is the sign of a healthy city government when you've got this kind of relationship between expenditures and your fund balance. And you've been able to maintain that just about every year. So as everything grows, so does the slide on both fund balance and on expenditures grow together. That's unusual, and that's very good. Okay, a couple other funds I'll talk about. You've got in other governmental funds, you've got capital improvements fund. That this past year took in 25 million, but spent about 42 million. That was by design. You had taken in the monies through different funding sources in prior years, and you really spent a bulk of it this past year as designed. That 42 million, I think like 38 million of that was in capital assets, fixed assets, whatever you want to call it, places like this right here. Similar thing you'll see with the other funds. I think King Street, most of the 3 million expenditures was debt service related, principal and interest, but it did take in about 10 million and upped its fund balance by 7. Next slide. Your drainage fund is a large operation. You took in about 73 million. That's the number just below the middle of the page. You spent about 58 million. Of that 58 million, the solid majority of that was going to be capital assets and those kind of things. Again, an increase in fund balance, though, of about 15 million. Next, please. Your International African American Museum spent about 36 million in expenditures. Just about all of that was on the facility itself, on the capital project that we're talking about. So you're taking in a lot of funds in previous years. You ended up having a use of those funds of about 33 million this past year, a decrease to fund balance. You still have about 8 million in fund balance in that fund. So it's still in a good place right now, but it definitely was in full tilt mode in construction this past year. You've got other non-major funds. Those were the ones we consider to be major. You've got all kind of other governmental funds that take in about 79 million and spend about 86 for about a $7 million use of fund balance. The next slide goes into your enterprise fund of the parking. Parking, I tell you what, places like Savannah and Charleston, parking is a big, big item. You know, your downtown areas are very constricted. You've got all kind of store shops and places people live. You got to have parking. And like Savannah, you all have a very large operation on the parking facility side. You've got total assets about 157 million with equity of about 96. You took in 21 million this past year and you spent about 18. Including that 18 is depreciation. So you had a real good increase in your net position. Your operating cash flows, which is the last thing that I have on here, is 12 million. That's real important that your parking facilities can generate positive cash flows because you have debts and the have to constantly improve those facilities. You want to make sure that those parking garage facilities are doing their job and creating their own positive operating cash flows. So again, I think that's working very well myself. You heard me talking about PIBA earlier, talking about your pension and those kind of things. I do think it's important to emphasize what's going on there. You've got two primary plans that you're in, the SCRS and the PORS that's managed by PIBA. Right now, if you look at the far right-hand number on each one of those rows, one says 50.7 and one says 58.8. Does everybody see that? That's the percentage funded right now that PIBA and you all are with your plans. And that's not just Charleston, that's everywhere. That's everybody who's in PIBA that's in these plans. You're 50.7% funded. You know, we've talked about this in the past. I'm gonna say again to you, be prepared because I think you're gonna probably start seeing a demand for that margin to go up. It's been sliding down the last few years. It's been up there. It's never been high. You know, a lot of our single employer plans that we have out there are funded like 80, 85% funded. I know a few years ago, people was like 65, 67, that kind of thing. It's sliding. At some point, they're going to come calling all the participants and saying we need more funding. So you probably have already been giving them more funding, but it's probably going to continue to be that way as you look forward into the future. Overall, you're at 55% funded. Last year, overall, you were at 59. So it's gone down about 4 points just in the last year. So it's just something worth noting. As far as other communications that I have with you all today as your auditor, it's always important that I let you know if we had any kind of problems, anything that we had a conflict with management, we disagree with management or something of that kind. We did not have anything like that. We did not have any situations that required us to get outside consultation to go talk to an expert in some field about what's the right answer here. We had none of those kind of things. Audit adjustments were very minimal. We did not have a lot of audit adjustments. Now, what does that mean? That says to me, you've got a clean set of books. There's a lot of governments that we go to that we're able to give a clean report on, but we have gazillion adjustments to make it happen. That's not the case here. Your books are in fine shape. They do a great job of managing things throughout the year, and I think they do a great job in doing their year-end closeout. So I can't speak high enough to how good that is to have that situation as you have here. We are independent. We've maintained our independence. There's an invisible line out there about auditors, what we can step beyond and violate our independence. We're nowhere near that. It's a very clear and distinct line with you all as to what our job is and what your job is, and it works very well. So I don't have anything to alarm you with when it comes to those kind of communications. And with that being said, that pretty much summarizes what I wanted to cover with you all today. I've been doing all the talking. I'm going to open the floor up to anybody who's got any kind of questions.
All right. Thank you, Mr. Miller, for that very thorough report. Does anybody have any questions? Councilmember Shade.
Thank you, Mr. Chairman, and thanks for that very thorough tour of our financial status.
Yes.
You made reference a couple of times about our health and where we are for a city of our size. Where do we really stack up with other cities in the state of South Carolina with our population size overall? How would you rate us in that?
I think you're rated very highly. I think you're in a very good position. You know, you're a 12/31 year in, okay? And that means that you're being measured essentially at one of your fattest times a year, okay? So we've got to keep that kind of thing into our mind when we look at things like this. If you were a June 30 year in and I told you had 180 days of fund balance, that would be incredible because your property tax season is just around the corner. In this case, you all are at 12/31. You've just collected most of your property taxes for the year. You're at your fattest and happiest moment. So you're in a great place. You still got cash flow management you've got to deal with. As you start getting those leaner months that we're in right now, I bet I can look at the group right now and say, are we looking quite that good today? Probably not. We've had to use some of those fund balances as we get into the summer. But I think you're in a great place right now overall. I've got no issues when I look at what you all are doing. Like I said a few minutes back, I think y'all are healthier today than you were 5 years ago by far.
And my follow-up question would be, if you had to wave a yellow caution flag, what would be those areas that you would caution us on?
Well, I think you've got a lot of activities going here when it comes to building these assets, okay? And one thing we all have to remember is when you build these facilities, they will come. Remember that movie? You build it, they will come. When people start to come, that means you've got to have the operating abilities to sustain the operations. I cannot tell you how many times I've seen government build facilities, state-of-the-art, beautiful facilities, and then they struggle with operating them. So just think about those kind of things as you're doing some of your improvements and building new facilities. Are we going to be able to sustain them as well as we'd like to, and furnish them and support them the way that they need to be? You build something beautiful like this, hopefully it looks like this in 10, 20 years. But I've had a lot of governments that build something like this, and then all of a sudden 5, 6 years go by and there's red clay or sand out in the parking lot, and they say we don't have the funds to maintain and manage. So just that'd be one thing I'd wave a flag, because you've got a lot of asset activity going on right now. You really do.
All right, do we have any other questions from council? Do we get anything for joining the billionaire club?
Mr. Chairman,
As a city?
I'll give you one of
Mr. Bear.
those.
Mr. Chairman, I just want to thank Mr. Edwards for your hard work in preparing the report. Of course, as you know, the report just reflects what you find here. And so I think that's a tribute, if you will, to our fine folks at Budget and Finance, number one, but also the teamwork of the whole
I agree.
staff and keeping, expenditures under control. Everybody's, particularly in the last year and a half, been
Yes,
playing their part. And so thank you for recognizing that.
absolutely. Well,
Yes, sir.
you touch on a very important point. The theme starts right here, and the theme then trickles down. And all I can say is I've got a good vibe when I come to work with you all, that we've got a good situation between management and you all's governance. It all seems to be working very well right now from this guy's point of view.
Thank you, sir.
All right, I just had one quick question for you, if you don't mind. You mentioned a minute ago that operational expenses can be a challenge when you have a local government like ours that is rapidly, expanding its capital portfolio. As currently situated, what are the revenue sources that the city of Charleston has that goes into operational maintenance, those types of expenses right now? Is it, obviously, it's property taxes, but what are some of the other sources currently?
Well, like any city government, you've got a lot of different kind of fees that you have in your structure. When you look at something like recreation, okay, this is one of the harder things to fund when it comes to operations. Typically, these type of beautiful accommodations don't get funded except through property taxes and special funds from the city. You got to just look at everything. You got to continue to look at parking. Parking is one of your big areas that you've got to always meet the demands of your consumers out there. They want parking. They want all these things. Well, you've got to make sure that you have the right mix and fees and what the operation is going to be. It's a constant struggle with any government of this size and nature. There is no magic answer to that question. It just means having a good dialogue between you and management, thinking together about what we want to accomplish.
Good deal. Thank you so much for your presentation. And if there's nothing else, we'll move on to the next item.
Thank you.
Thank you. Next item on our agenda is any other business. Does anybody have anything they'd like to bring to the floor for the audit committee? Hearing none, we'll move on to number 6. Do I hear a motion to adjourn? All right. All in favor, please signify by